If you blinked this week, you might have missed it. Treasury bills are oversubscribed, interest rates are shifting, and the Kenyan shilling is sending signals. Welcome to Cytonn Weekly, and with me are Cytonn investment analysts Ryan Masharia, Sylvia Kamau, and Susan Chege, and we shall be breaking down the financial markets and what it means for you. On fixed income, so the report shows oversubscription of T-bills, but shifting demand across tenors. What does this shift mean to investor time horizons?
Thank you for that question. About the shift now, term it as shifting necessarily, but a tactical shift by the investors. For instance, if you look at the 364-day paper, it's still the highest despite a sharp decline relative to the previous week compared to the increase in the subscription rate for the 91-day and 182-day paper, showing investors are looking for liquidity and flexibility in terms of their investments.
So with yields declining and inflation projected to decline, what does this imply to real returns on government securities?
The real returns remain positive and historically attractive. For instance, the real return on the 364-day paper is roughly around 4.5%, while that for the 91-day paper and 182-day paper are roughly around 3 to 3.5%.
Now on equities, the market declined mainly due to losses in large cap stocks such as Safaricom and major banks. How did these losses outweigh gains in other counters?
Thank you for the question. So in the markets, not all companies are weighed equally. So we usually have like markets that are big and they are actively traded in the market. So these are usually, they're known as large cap stocks, and for Safaricom, it's a large cap stock. And these large cap stocks, they weigh a big portion in the market. So if they occur any losses, they also bring the market down with them. And even though there will be gains from other companies, the weights of the gains will be less. Hence, they won't cut back on the gains that have been recorded by the large cap stocks.
So despite the weekly decline, year-to-date returns remain positive. How can both of these be true at the same time?
So here we have to focus on the time period. For the weekly performance, we focus on the performance of the markets for that specific week. But for the year-to-date performance, we look at the performance from when the year started to now. For this week, we had a downward trajectory in the performance of the market, but the year-to-date still performance remained positive because the gains from the previous months outweighed the losses that were made during the week.
Okay, on real estate, what role is the proposed National Infrastructure Fund expected to play compared to traditional government borrowing?
Thank you for that question. So for the traditional government borrowing, they mainly focus on annual budget allocations as well as sovereign debt for pooling funds for infrastructure projects. But when it comes to the National Infrastructure Fund, its main focus is to come up with a more structured and more sustainable method of mainly pooling capital from areas such as the government, the private sector investors, as well as financial markets. Yeah.
Now, based on the prices reported, how are listed REITs currently performing relative to their initial listing prices?
So when it comes to the performance, this is at 20th February 2026, the Econ D rate and I rate traded at 27.4 and 23.2 shillings respectively, and this represents 33.4 and 14.5% gain from its 20 shillings inception price. And then when it comes to the Ilam Fahari I rate, it's traded at 11 shillings. This represents a 45% loss from the 20 shillings inception price.
That's it for the market update of the week. And for more information, visit the cytonnreport.com. Stay informed and see you next week.